And we are beginning today's broadcast by talking about what's happening in the markets. And according to the latest crop progress report, Nebraska corn rated 67% good to excellent, with 1% of the crop mature. Soybeans rated 69% good to excellent, with 93% setting pods. Tredas' Doug Simon joined me this week to discuss what's moving the markets and offer advice heading into harvest. I began by asking what he's seeing in fields as he travels around the state.
Crops kind of drying down here lately. We've had a lot of heat, a lot of dry weather. Things were rated pretty highly in the eastern corn belt earlier, and they've not been getting rainfall, and so their conditions dropped, and a little bit below what the trade expected as well. So, and then there's just the Pro Farmer Tour was out with their numbers, and they came in a little bit higher than what USDA was seeing. And Nebraska went through and looked at some pretty good dryland crops, so Nebraska yield came in pretty good. And so I think that was one of the things with the Pro Farmer Tour is how is that going to turn out. But when they went through like 7 states, they were like, their weighted average was up in the 184s. But then they always go back and they adjust it after they get together on Friday. And in 2018, I think they were up in that 184, and they went and came down to 177 on their final report. And that's what they did on Friday. They came down from a 184 kind of weighted average across those 7 states, came down to 177, which is still higher than USDA by couple bushels, and their bean yield was maybe 1 plus, a little bit bigger than the USDA number. So those numbers also hit the market pretty hard last week.
Yeah, and we're also in that time of year, maybe farmers need to get that post-harvest grain marketing plan together. So what are some questions we should be asking ourselves when we're developing that strategy?
That's a good question. When the crops are drying down pretty quick, and the question is there's an old crop basis, there's an inverse where actually beans were $1 over and they've come down to 30 under, which is what they're posting for their new crop basis levels, which when you look back at history, that's a real typical number at ADM-Lincoln. The last 3-4 years, we've had some really wide basis levels with the trade war going on, but that I thought we'd have a firmer basis going into harvest, but there's still, when you look at that versus history, that's still a good number. Then you're going to contrast that to corn, where we've got 80 to $1 over basis for old crop, and that we're going to bridge that gap where we go to maybe 10 to 20 under for harvest, and you're going to have to look at it and say, okay, how much basis appreciation do I have post-harvest in corn and beans? Like right now, there's about a 7-cent carry in the corn futures market, but there's only about 5 cents in the bean, which isn't relatively enough relative to the corn. So people will be looking at storing corn and trying to figure out, okay, is there a wet corn program that I can take advantage of? And I guess we're going to talk about China buying beans.
That's my next question.
That's your next question, but they've been buying beans the last, there was about 11 days in a row that they bought beans, and then there's 2 days this week, Mexico bought beans. So if we need to start shipping those beans out, maybe those rail bids will start bumping up, and maybe our bean basis will jump up. If we've got 150 million carryover on beans, it's going to be tight, and the corn carriers are going to be tight. So I think there's going to be a lot of aggressive bidding between rail loaders, ethanol plants, soybean crushers, feedlots, for our corn and beans this year. So I have another positive, outlook here for basis.
As you mentioned, China buying soybeans left and right. So is corn,
Correct.
Is it going to be far behind? What do you think?
That's a big question. USDA had the, number last week in the WASDE report at 26 million metric tons, and that's what they had for last year, and that's what they're projecting for this year. You look at somebody like an ag resource, they're saying 29 million metric tons. That's about a 3 million metric ton difference, which is about 120 million bushels. So USDA's carryouts in the last report were about 1.2 billion. Some of the commercials are using about 1 billion bushel carryover, and that's kind of that. Depends on if China buys the beans. There's rumors that there's resting orders underneath the market lows that we had earlier this week that China would start buying them. Hopefully we'll start seeing China kind of step up, because it's been a quiet export docket lately, for old crop, going from basically that May onward. They were bought a lot and then they were shipping a lot, and it's been pretty quiet the last 2 months. So hopefully that's going to pick up, and a lot of our export demand is going to be based on China again, because they were 7 million metric tons 2 years ago. So they've had and those are all exports for China. So they'll buy corn from Brazil, US, Ukraine. But guess what? Brazil had such a poor crop, they don't have that much to export. So I think we'll be in a good position there to export corn to them.
Is there anything else internationally that you're keeping an eye on that could impact U.S. markets?
Right now we're in a market where, like, if you look at the U.S. stocks of corn, beans, and wheat, they're all tight. they're as tight as what they were back in 2012. If you look at the world numbers, they're a little more robust. But if you look at those actual exporters of corn, beans, and wheat, which the U.S. is, of corn and beans definitely, we're definitely a wheat exporter as well. But those stocks are actually, as tight as what they were back in 2012. So the overall supplies on the world market's keeping a little bit of a cap on it. But when you have those exporters being tight, that's the residual supplies that are available. So there's going to be demand, that it's going to be competitive between the buyers that are out there. So I think that's encouraging. So.
And you mentioned wheat when we were exchanging emails before prepping for this interview. You mentioned how wheat's kind of has some interesting things going on with it, whether it's basis, whether it's stock to use, whether it's how the higher dollar is impacting wheat. What do you think about all that?
Yeah, the last time, what was it, probably 13 years ago when corn and beans and wheat, we had a big run up in prices. The price of wheat was tight then too, and it was pretty steep premium into corn. This year, during the summer, we got corn and wheat on par with each other, and basically a lot of feedlots out west ended up buying a lot of wheat, and that corn got sold back into the market instead of feeding corn, and really collapsed our old crop corn basis. So we've actually fed more wheat this year. That wheat goes into ration. It's usually going to stay there for 3-4 months, but now it's moved up where wheat's up in the $7 and the basis is 80 cents. You're looking almost $8 wheat, and corn's in the $5.50 with a dollar over basis, $6.50. So the wheat's priced itself out of the ration, but that was a big impact on the corn basis this summer. But there's a lot of that dynamics going on. You got up in the north, you've got North Dakota, South Dakota really dry. Well, you go into Canada, extremely dry up there, and so they're really going to suffer on their wheat production as well. So we've got a tight world wheat market, which is going to be, it'll add more interest to the corn and soybean markets as well.
For sure. Okay, great info today as always. Any final marketing or risk management advice that you want to leave us with?
Well, we're always trying to look ahead and what's going on in the world, and we're at $5.50 corn on D's corn and $13.30 on the Novi beans. They're really good prices. I think if you have to sell off the combine, you can always look at some option strategies. The volatility's come down considerably from where we were 2 months ago, so keeping some ownership in the options. Whenever you have a fall price that's above what our spring price was, there's a higher probability that we could have higher markets, later in the year. So I think keeping, if you have to sell it, you sell it, and you keep some ownership. It's cheaper than storage.